ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. Peter McGuire, CEO at XM Australia, joining in. Welcome to the show, Peter, and always a pleasure to speak to you and get insights from you. Peter, with what's happening in terms of global markets as well currently, what's the sense that you pick up? Because clearly, if you see the action that the Fed has been taking in terms of squeezing out the liquidity, increasing interest rates, similar kind of action is what other central banks are taking as well. And you have the Bank of England, Bank of Japan, which is in the offing. How are you viewing the global situation?
Well, Hiral, and it's lovely to see you, and greetings from Sydney. One of confusion. And I think the confusion is that we've seen an enormous volatility over if I only regard 2022, I don't want to go back to 21 or 20. We've seen enough movement over those 2 years to satisfy any trader. But certainly the first 5.5 months of this year have been enormous. Price volatility across the US dollar, across what we've seen in the yen, what we've seen as far as energy prices, natural gas, base metals like aluminium and copper. And of course, what we've seen with an equity market sell-off has been dramatic. And it's been just hold on to your hat, because I think that there's even more volatility over the next 6.5 months leading up until the end of 22 to satisfy any trader's appetite.
Right. So with all of this said and done, what's your anticipation? That Fed is switching to sharper rate hikes. How much is on the annual according to you?
Hiral, that's the $64 million question. Do they hit us all with a bit of a surprise? And not so much a surprise anymore. 3 weeks ago it was a surprise. 2 weeks ago, even if Jay Powell was going to come out and say we're nudging it up 0.75%, but now there just seems to be, I think, a large component of analysts across the globe that are just going, yep, I think it's going to be 0.75, and I wouldn't be surprised if that's replicated again next month. So look, it's a toss of the coin. Go grab a coin, and it's either 50 basis points or 75. Inflation is a major concern where we're looking as far as trying to rein it in, and the man and the woman on the street are being hurt terribly with, and I like to talk to you a little bit about that, you know, how they're feeling in India, but certainly in Australia, and wage rises. I have a friend, I just use this, just a common knowledge, $27 an hour, that's for a particular position. It's not unskilled, but it's not overly skilled. It's a casual, that's what they get in Australia for this particular role. And this particular person in that role has asked their boss for a wage rise to $35 an hour. So that's giving you an indication that it's just on 30% wage rise. We're not, and it's not for really a negotiation. That's what I need. So once you've got those sort of, and that's just a rough example, but you've got to hear those examples because that's true. You may not be hearing that from a central banker that's on a couple of $100,000 or $1 million a year, but when you're hearing it from the man or woman on the street, they're telling you how it is in their own hip pocket. And that inflation story is certainly impacting the consumer globally.
Right. So overall, if you see in terms of the US, you know, the US CPI has unlocked 2 new highs as the inflation expectation has rebounded. With that, do you think we're slated or we're already into a recessionary phase?
Many analysts, again, are saying that we're already in that. We're deep into a recession. So, you know, when you start looking at the headline numbers, maybe the data is not showing that, but the framework is one of much concern, and the deleveraging, asset prices, stock markets, once they start taking the liquidity out and they start ratcheting up rates aggressively, then you're going to have an inflationary time and which we have got inflation. They're trying to rein it in for everything we need, being food, being utilities, being fuel, and of course, food, and then you'll have a deflationary time for asset prices, which traditionally will be first cab off the rank would be certainly stock markets, and then it'll look at as far as property and so on.
Okay. And with this, how are you expecting the Bank of England to go from here on? Because clearly Thursday we have when the latest policy decision will be announced. But with many other central banks going into the higher rate cycle, do you think UK is also something which is slated to get there? Because clearly there are some warning signs of recession coming in.
Well, this is the issue that we face. First off, to answer that, I can't answer that on Wednesday because I want to see what the Fed's prepared to do and how aggressive they're going to be. And then once that happens, I think then the Bank of England will make their own decisions about how aggressive they have to be. But what you just said is the great major concern, which is a stagflationary timeline or mindset, that we've got running away inflation, we'll have interest rates ratcheting up quickly, and then you've got negative growth. Or worse, you can't get back to some solid growth. So it could be 1 quarter, 2 quarters, 3, 4, and that is really a dilemma for any central banker anywhere. That you ask them, how do you solve a stagflationary environment when you've got runaway inflation? And you could write a PhD, you could be a professor of economics at a top business school, and I don't think even they would know how to fix it.
Mm-hmm. Okay. And apart from that, if you see in terms of the way the bond yields are moving from here on, what's the indication that you're getting, and how do you see it impacting the dollar index as well?
First off, the dollar index has been a standout, and we're now at 105.20. I had a look at it only half an hour ago. So that US dollar is just absolutely on fire. We've got a euro at 104.40. We've got a yen. Who could have imagined it at 135 yen? I mean, 135, it's showtime. If they open up the doors and allow you to travel to Japan, every person in America should be heading to Japan because it's cheap to travel and a great country to visit. So the first off is strong US dollar. Secondly, as you mentioned, as far as yields, let's just see where the 2-year is and the 10-year after Jay Powell's comments, and whether we see those the steepness of the yield curve, what's happening as far as bond prices. This month is going to be a great month. We're 15 days in. We've got 15 days to go, and I'm expecting to see a fair bit of movement in the markets over the next 15 days, Hiral.
And with that, what's the impact are we expecting with regards to where the commodities market is concerned? Because clearly, if you go to see in terms of the commodities space as well, the expectation is that the Fed will remain aggressive due to higher than expected US inflation data. Now, taking the aggressive rate hike by the Fed into consideration, would you say sell on rise in terms of commodities should be the strategy, especially for gold and silver, because there is a possibility that gold and silver will start inching higher from here on?
Well, first off, I'm glad you mentioned those precious metals at the end. It's very difficult to analyze the commodity sector and you've got to be specific, and you've got to say, well, right, let's look at foods, or let's look at stud lumber, or let's look at cattle. Let's look at base metals. But what we're looking at is precious metals, and precious metals are unique because when you've got times of turmoil, they've been a store of value, and certainly to the wonderful country of India and certainly China, they've been big buyers and big hoarders of precious metals, and certainly gold. And I think silver's probably got, from a percentage terms, more upside than gold. And so from what I hear collectively, the noise that I hear is that all the traders say that what they're hearing on the street, the man and woman on the street They're not worrying about derivatives or ETFs of it. They're buying physical. That's what they're buying. And they're storing it under the bed, or they're storing it in there wherever they store, maybe underneath the baby's mattress. They've got another bar of gold. But that's what they're doing with themselves. They're really storing that as a sign of value, and they believe, this is collective across the world, that there's more upside due to the turmoil from inflation, asset price fear, and overall, I think a position of they want to protect themselves and their family. So that's the reason why I think there's going to be a more demand from a physical precious metal standpoint.
Okay. Okay. And how would you look at the base metal space then?
Hiral, you've only got to look at what's happened to aluminium. Have a look at copper. They've been so heavily sold off that it's been a very, very soft market over this calendar year. Well, over the last 3 months anyway. There's been no fire there at all. Maybe we're going to see a return to some as far as pricing. You might see a little bit bid up over the next couple of months, but there's got to be strong demand. There's got to be, and what a lot of these mining companies have done, they haven't invested capex for new mines and certainly to retrieve more of that particular ore or metal from the earth. So if you haven't got the investment, it's very hard to, because as you know, a mine life, the life of a mine is only a period of time. And it gets to a point in time that it becomes mature, and they've got to look at a new mine to mine that particular ore or mine that particular base metal. And if the company is not spending the capex on new fields and new discoveries, then there's going to be, well, a supply shortage moving forward. And that's another one of the major reasons that I think you've got to keep a close eye on the base metal market.
Right. And overall, Peter, what's the view that you have with regards to crude as well as natural gas?
Nat gas I saw this morning, and it's back at $7.30. When I say this morning, Sydney time, which is the close of New York, back at 7.30. So it's been massively sold off from those $8.80 highs, nearly $9. So nat gas has given up 20%. But when you're thinking about the price volatility of what you've seen in the short term, it's just an incredible market to trade nat gas. That really is. It's like a bucking bronco. You know those cowboys that jump on those, the big bulls at a rodeo, and they hold on for dear life, and you don't know, like, is this guy for real? You get trampled to death. Well, that's what it's like trading nat gas. It's wild. You don't know whether it's going up or down, and big swings. So all I'll say is I still believe that there's going to be more uncertainty in the nat gas market. And as far as crude oil, I'll start with the seasonality, because as you know, there's three factors for the market. There's the fundamentals, the technicals, and the seasonality. People forget the seasonality, Hiral, but the seasonality is weather outages. We spoke offline just as we were, because we've known each other for many years. And I said to you, how are you? And you said, I'm well, thanks, Peter. Good to see you. And I said, how's the weather? And you said, there's a light rain at the moment, and we're expecting the monsoon in Mumbai will commence shortly. Having been to Mumbai many times, as you know, and I get wet shoes when I go there, I've got to be conscious what time of the year do I go there. So where I'm going with this story is we're about to enter the hurricane season in America, and they're saying it could be a very, very bad hurricane season. So what does that create? Bottlenecks, supply disruptions, and that's not what this market is after at the moment. So if we have a bad hurricane season, then we've got to put our minds back to 2006, of course, or 2005, I think it was, or 2006, Hurricane Katrina in New Orleans.
Mm.
So we can really create a lot of angst to a trader and to the producers, and from a supply disruption, that if you have massive outages with hurricanes and other weather conditions that can disrupt the market in the United States, and we've already got the issue with Russia and Libya at the moment, and Ukraine. So it's a very delicate market at the moment. And I think we're going to see price volatility. I wouldn't be surprised to see oil go up. I won't be surprised to see it at 130 or 140 handle. I don't know if it gets to 150. How do I know? But I wouldn't be surprised for it to edge up higher. And I wouldn't be surprised for it also to touch $100 over the next 6.5 months leading up to New Year's Eve, because all of these big themes that can play out at any time are out.
Right. So all in all, Peter, if you have to say, look at levels in terms of crude, in terms of the dollar index, or in terms of gold, what would those levels look like?
US dollar index, we're at 105. I'm making a note here, about 105.20. Let's see how aggressive our dear Mr. Powell is, Fed Chair. If he rocketed it up 0.75 and threw another 0.75 in July, I wouldn't be surprised if the US dollar index hits a 106.5, 107, may go higher. So there's the first part, and it depends on the timeline, but I won't be surprised. As far as crude, we're in mid-June. Demand is strong. I won't be surprised, as I mentioned, a 130, 140. I won't be surprised because of conditions with seasonality and hurricanes and so on. And we've got the geopolitical concerns with still that ongoing saga with Russia and Ukraine. So there's that side. And when you go to gold, I don't know the short term, but I still believe that gold's got its best days ahead of us, due to all of the conditions that we made reference to earlier in this interview. So yeah, it's can be a $2,000 plus $2,500, but I can't give you a timeline. But I really do think that gold's best days and silver's best days are ahead of us.
Right.
There's too many central banks, Hiral, there's too many central banks buying large amounts of gold. So that tells me that demand's there. And have a look at Bitcoin, 21,000. Who could have imagined it?
Absolutely. And that's another avenue to watch out for as well. But thank you, Peter, so much for joining us. Always a pleasure to speak to you. Thank you. Good luck, and speak to you soon again. Stay safe.
Oh, it's lovely to hear you, and take care, Hiral.
Thank you.
All the best.
Take care.
Bye.